Thank you, and welcome to the second annual Ondo Summit. We have over 400 industry leaders with us here today from the financial services industry and blockchain industry, with thousands more tuning in virtually online. Now, I know you really wanted to see Nate up here first, but unfortunately, he has an absolutely terrible, terrible case of the flu. He thought it better not to infect the entire TradFi world with it, so he shall be missed today, and here I am. Thank you all, however, for joining us today and for battling the cold and snow to do it. We know that for many of you, that was no easy task. Now, last year at the summit, I stood here and told you that we at Ondo believed a change was coming. A change where blockchain technology would fundamentally upgrade our financial markets. We called it Wall Street 2.0. And that change is needed. Despite the incredible innovation that is modern financial markets, it still suffers from many limitations. Limited transparency, slow settlement, restricted market hours, walled gardens, platform lock-in, manual processes, and most importantly, a lack of access. For billions of people globally, the financial system has failed to provide them with the ability to provide high-quality financial assets and services altogether. We've always maintained that public blockchain technology and DeFi could solve this, because at its core, the benefit they provide is exactly access. This means the access to own, to create, and to use the financial products and services wherever you are, whenever you want. Over the past year, we've made real progress in enabling that mission. We grew OUSG and USDY by expanding their TVL and distribution footprint dramatically. And most importantly, we launched Ondo Global Markets, our tokenized stocks and ETF platform that can do for US capital markets what stablecoins did for the US dollar. But it's worth noting that we didn't just ship products and platforms. We defined the category. We are the #1 in both tokenized treasuries and tokenized stocks and ETFs. In this last category, we have over 60% market share. We have built an ecosystem of hundreds of partners spanning traditional financial services and crypto players. And we've established Ondo as a thought leader in bringing financial markets on-chain. These efforts, combined with our product innovations, have led Ondo Finance to become one of the most recognized RWA brands in the world, even used to illustrate tokenization in official White House reports. 2025 was a fantastic year of delivering both products and partnerships to make Wall Street 2.0 a reality. And to illustrate that further, I'd love to welcome Brendan Florez, MD, on stage to give an overview of what we actually delivered. Brendan?
Thanks, Ian. Good morning, everyone. As Ian just mentioned, over the past few years, we've been working hard to improve the accessibility of financial markets by bringing traditional assets on-chain. Inspired by the success that stablecoins had in providing on-chain exposure to the dollar, we wanted to do the same for other traditional assets. As many of you know, this started with US Treasuries to bring the risk-free rate on-chain. And now, as we'll discuss, we've since moved on to stocks and ETFs. Now, a question we get frequently is why we've focused on tokenizing liquid assets. For many years, the thinking was that because tokens can be fractionalized easily and settled quickly and cheaply, tokenizing private assets could improve their liquidity. In reality, however, it's not so simple. While technology certainly can help, private assets often suffer from other issues that technology is less equipped to address. These include things like information asymmetry, lack of fungibility, pricing difficulty, and resistance from issuers. Instead, we've long believed that, as we've seen with stablecoins, the assets that would benefit the most from tokenization are those that already have deep liquidity. These are large, in-demand, easily priced assets like the US dollar, and like publicly traded securities, that can benefit from tokenization to make them both more globally accessible and saleable as collateral in DeFi. In other words, we're not tokenizing illiquid assets to make them more liquid. We're tokenizing liquid assets to make them more accessible. By the way, this opportunity is also enormous, with globally publicly traded stocks and bonds representing almost $225 trillion in value. Now, these are some of the largest, most liquid markets in the world, but access to them is still constrained by things like geography, market hours, platform fragmentation, and legacy rails. But by tokenizing these assets, we can begin to address these issues and take another step closer to our mission of bringing financial markets on-chain. So with that, let me turn to what we've actually delivered this year, starting with our tokenized treasuries. First is OUSG, our globally available institutional-grade treasury product. The goal of OUSG has always been simple: enable institutional investors the ability to instantly convert between tokenized cash and treasury exposure at any scale by providing the deepest instant subscription and redemption liquidity of any tokenized treasury product. OUSG does this by diversifying its backing across other tokenized treasury funds and integrating support for multiple stablecoins. This approach both aggregates the liquidity across these assets and, via our Nexus technology, creates fungibility between them, allowing eligible holders of any supported assets to easily and instantly swap to any other. This also means that with our Nexus offering, we can enable other asset managers to offer their clients the same instant 24/7 subscription and redemption capabilities. Now, this past year, we've expanded the backing of OUSG to include tokenized treasury products from Fidelity and Figure and brought it to Ripple's XRPL blockchain. We also took steps to integrate OUSG with traditional banking and payment rails via tokenized deposit networks, including partnering with MasterCard as the first RWA provider to join their multi-token network, and with JP Morgan and Chainlink to demonstrate a delivery versus payment transaction versus JP Morgan's Connexus. So what does this really mean? Well, imagine a world where consumers and businesses can instantly and automatically sweep the cash in their bank account to treasury exposure to earn the risk-free rate, yet instantly convert back to cash when needed for a debit card purchase. It's pretty cool. Together, these instant transaction capabilities and TradFi integrations mean that OUSG isn't just a tokenized treasury product. It's becoming an institutional liquidity layer that connects tokenized funds, on-chain execution, and real-world settlement networks into one interoperable platform. We've also continued to improve USDY, our freely transferable tokenized treasury product. This past year, we expanded USDY to the Stellar, Sei, and Plume blockchains, making it accessible to millions more users. We continue to integrate USDY into many parts of the ecosystem and improve cross-chain usability with better bridging infrastructure. And in December, we enabled instant minting and redeeming of USDY for select institutional partners, making USDY truly behave like a yield-bearing stablecoin. Today, USDY is live across 9 chains, integrates with 70+ partners, trades across multiple DEXs, and is accessible to users in over 80 countries through dozens of interfaces. In our mind, these things make USDY the leading US Treasury asset for DeFi. Thanks to these efforts across OUSG and USDY, I'm pleased to say that Ondo's tokenized treasury products collectively now hold over $2 billion in TVL, making us the #1 provider of tokenized treasuries in the world. But despite all this progress on tokenized treasuries, the biggest thing that we did this year has to be the launch of our platform for tokenized stocks and ETFs, Ondo Global Markets. Ondo Global Markets is a tokenization platform that allows us to quickly tokenize all US publicly traded securities, providing investors outside the US, many for the first time, access to exposure to these high-quality financial assets. Since it launched just 5 months ago, Global Markets assets have been purchased by over 30,000 investors across 90 countries, with over $9 billion in total trade volume and over $550 million in TVL. That's more TVL than all other tokenized stock platforms combined. Now, here are just some of the key features of global markets assets. First, broad asset selection. Today, investors can gain on-chain exposure to hundreds and soon thousands of NYSE and NASDAQ-listed securities. To be clear, this isn't just a handful of popular stocks. Investors have the chance to build a diversified financial portfolio across asset classes, sectors, strategies, factors, regions, and more. We're talking about things like AI and robotics, commodities or real estate, leverage strategies, income strategies like CLOs and high-yield bonds, all available, all on-chain today. Next, instant global availability. Investors can mint and redeem global markets tokens instantly, 24 hours a day, 5 days a week. This means a trader in Tokyo, London, or Sao Paulo can access US equities whenever they need to, eliminating the friction and delays that come with legacy market infrastructure. Next, and as we'll discuss more in a few minutes, global markets tokens are designed to be able to offer the same liquidity as the underlying security on traditional exchanges. As you can see from the chart behind me, the liquidity of publicly traded securities often vastly exceeds that of even the most heavily traded cryptocurrencies. By inheriting this liquidity for its assets, global markets provides investors access to the often incredibly deep liquidity that already exists. Now, unlike other tokenization approaches which require explicit company opt-in, the global markets approach effectively wraps existing securities into a tokenization layer. This, combined with the inherited liquidity model I just described, allows global markets to rapidly scale up the number of assets and to quickly launch new ones. For example, just last month, we listed a tokenized version of BitGo stock the day of its IPO, making it globally available across Solana, Ethereum, and BNB chain. This marked the first time the stock of a NYSE-listed company was mirrored on-chain across multiple blockchains on the day of its IPO. And we can continue to do this. That's why today we're announcing for the first time a new service called Ondo Global Listings, enabling us to offer tokenized versions of select US IPOs the day they begin trading on traditional exchanges. Global markets tokens can also be freely transferred to eligible investors and can be used in DeFi. Unlike traditional securities trapped in your brokerage account, once you hold a global markets token, you control it. You can transfer it peer-to-peer, bridge it across supported chains, or, as we'll talk about later, integrate it into any compatible DeFi protocol. And as always, global markets tokens feature institutional-grade investor protections, including over-collateralized backing secured by an independent third-party collateral agent, a bankruptcy remote structure, and daily proof of reserves. Global markets assets are also designed to be accessible wherever investors already are. For example, global markets tokens are already available on Ethereum, BNB chain, and Solana, on centralized exchanges like BitGet Global, Gate, and blockchain.com. They are also supported in DeFi via aggregators like onchain and Counsel, and in major wallets like Binance Wallet, Trust Wallet, and Topnod, the Ant Financial wallet. I'm also thrilled to announce for the first time that starting today, global markets tokens are now fully supported in MetaMask, the most widely used non-custodial wallet, further improving accessibility to global markets assets for millions of users. Okay, I obviously just said a lot of things, so let's take a step back. What are we actually doing here? Well, just like stablecoins, Ondo Global Markets is taking a highly liquid traditional financial asset and using blockchain technology to make it both more accessible and usable in DeFi. That's why we like to say that what stablecoins did for dollars, Ondo Global Markets is doing for securities. Okay, so that's what global markets has achieved. To talk more about how we've achieved it, I'd like to introduce Cameron Clifton, Ondo's head of engineering, to explain the innovative design behind the success and the foundations it lays for the future. Cameron?
Thanks, Brandon. So you've heard about what global markets has achieved this year. Now I want to explain how it works, and more importantly, why we built it this way. As Brendan mentioned earlier, a lot of projects attempt to tokenize assets to make them more liquid. But we focused on tokenizing already liquid assets to make them more accessible. And because the assets we already tokenize trade deep in US stock markets, we realized we didn't need to recreate liquidity. We needed to unify it with on-chain markets. Once we framed the problem that way, the design constraints became clear. We knew blockchains today aren't ready for the throughput and complexity of US equity markets, so rebuilding full order books on-chain to simulate traditional markets was not the right approach. Instead, we looked at trading models that already work at institutional scale and landed on one that fits our needs, request for quote. Here's how it works within global markets. An eligible trader requests a quote from the global market system. We compute that quote using real-time market conditions from traditional markets and return a binding signed quote in the response. At that moment, we're taking an enormous amount of information from traditional markets and compressing it into a single verifiable object that smart contracts can understand. That signed quote object is the bridge between two very different financial systems. It lets us pass through virtually the same liquidity and market depth you'd expect from the underlying stock markets without trying to recreate that liquidity on-chain, asset by asset. Once the trader accepts the quote, they submit the signature on-chain, and the smart contract instantly mints or redeems the token against stablecoins at the agreed price. From the user's perspective, it's a single atomic transaction. But liquidity and instant minting aren't the whole story. One of the real advantages of tokenization is programmability. And when you combine that with the fact that outside the US, global markets tokens are freely transferable, like stablecoins, they can compose naturally with the rest of the DeFi ecosystem. Let me show you a concrete example. In this clip, we're showing a real mint that occurred in January. A user spends 1 million USDT to mint 1,603 QQQ on, our global markets token that tracks the Invesco QQQ ETF. This transaction takes place between two qualified investors, Binance Wallet, an approved partner, plus DeFi infrastructure. The user is based outside of the US and has completed Binance's KYC process, which enforces all jurisdictional prohibitions for Ondo Global Markets products. Behind the scenes, Binance Wallet submits the user's buy intent via an intents-based decentralized exchange aggregator. A separate qualified investor onboarded to global markets sees that intent, requests a signed quote, and fills the trade. As a result, the Binance Wallet user receives brokerage-like execution quality, but with instant settlement. This model allows for fast price convergence across venues without any need for pre-funded inventory. This is what composability looks like in practice. Different systems coordinating through simple, verifiable primitives. Across small and large orders, we consistently see executions that closely track underlying market prices, with slippage comparable to what users would expect from a traditional brokerage. This chart shows the difference between our mint and redeem execution prices and underlying stock market quotes. Across a wide range of stocks, we remain within a few basis points of the market, often well under 5, showing that users are getting execution very close to traditional market pricing. There's another important consequence of this model, scalability. Because we're not forced to pre-fund inventory or recreate market depth for every asset we list, we can scale far beyond what pool-based and inventory-based models allow. We've already expanded to hundreds of assets since launch this past September, with many more coming this year. That same mindset also extends to distribution. From day one, multi-chain support has been a first-class design concern. We've partnered with Layer 0 to build a bridge that supports all global markets tokens through a single, unified smart contract system. When new tokens are deployed, they're bridgeable across new chains by default. Extending global markets to new ecosystems is straightforward, allowing assets to move wherever users and applications are. When you get liquidity, Transferability and scale right from the start. Tokenized stocks stop being isolated products, and they become financial infrastructure, building blocks for entirely new financial strategies and applications. You'll hear more about what this enables in just a few minutes. So I've talked a lot about the technology today, but that's only one dimension of what we built. Mark, our general counsel, is going to walk you through how we've approached the legal and regulatory foundations that make this system possible. Mark?
Well, thanks, Cameron, and good morning, everybody. As Brendan mentioned, Ondo Global Markets has already achieved tremendous commercial success with investors and partners alike. In parallel, Global Markets has made major strides in a developing global regulatory environment. In November, Ondo Global Markets received regulatory approval for its European securities prospectus, unlocking its ability to offer its tokens to the public throughout the EU and European Economic Area. And today, I'm excited to announce for the first time that with regulator consent, we have activated that approval into a live offering. Starting yesterday, over 500 million investors in 30 markets throughout Europe now have the opportunity to purchase many of the most popular Ondo tokenized stocks and ETFs, anytime, on demand. Now, as many of you know, achieving European regulatory approval is no laughing matter. And in this case, it's proof that the Ondo Global Markets model can operate under serious regulatory regimes. But it's also indicative of the fact that the United States is still playing catch-up. And as regulatory environments for tokenized securities continue to evolve outside the US, in Europe and in major global economic centers in the Middle East, Southeast Asia, and beyond, the United States risks losing its opportunity to both fortify and enhance its capital markets and technological leadership. As a nation, we simply cannot afford to lose this opportunity. And at Ondo, we're on a mission to make sure that we don't. But how? As we've previously written about, the US securities tokenization debate has been too focused on the relative merits of three different models for tokenization: direct ownership, tokenized beneficial ownership, and digitally native tokenized exposure to securities. As if US tokenization regulation is somehow a race that only one of these models can win. But this is a false dilemma. In traditional markets, investors have long demonstrated their interest in different forms of exposure. Some investors prefer to hold their securities through their brokers in the DTC. Others might want to hold them directly and custody them with, say, BNY Mellon. And still others prefer exposure via, say, funds, swaps, or even equity-linked notes. It will be no different on-chain. We cannot let ourselves be fooled into believing that one model is inherently superior to the others. All three of these models have their merits, and all three of them are perfectly viable in the US and many jurisdictions globally. But only one firm is currently positioned to pursue all of these models. You guessed it, Ondo. And we plan to do just that. It starts, of course, with Ondo Global Markets. I'm extremely excited to announce that just this morning, a little after 9 a.m., Ondo Global Markets BVI Limited, the issuer of Global Markets tokens, confidentially filed a registration statement in the United States with the Securities and Exchange Commission. Once effective, this filing would make Global Markets the first issuer of transferable tokenized stocks to be subject to the SEC's reporting requirements. And more broadly, this filing would provide transparent disclosure about the issuer that lays the groundwork for Ondo Global Markets to enter more jurisdictions globally when both regulation and commercial conditions are right, including the US. But we're not stopping there. With our regulated entity stack, which includes our SEC-registered transfer agent, our SEC-registered investment advisor, and our SEC-registered broker-dealer and ATS, we can leverage each tokenization model to unlock a vast array of on-chain offerings for US investors and global investors, as well as asset managers, corporate securities issuers, and other market participants, including, for example, digitally native registered investment companies and private funds, on-chain corporate IPOs, peer-to-peer and brokered on-chain markets for tokenized public securities, funds, bonds, and other assets, fully on-chain dividend distributions and shareholder voting, prime brokerage, and much, much more. The point here is that we're not waiting for clarity in the US markets. We're actively creating it. We believe this is important because if we do this right, the US doesn't just allow tokenization, it benefits from it. It means US investors get better access, better optionality, better portability, and better market plumbing over time. And it means the US capital markets remain the global center of gravity, even as they become more accessible in an on-chain 24/7 world. So that's where we are. Now I'd like to welcome Ian to tell us where we're headed. Thank you.
All right. Thank you, Mark. So you've heard what we shipped, you heard how it works, and you've heard all about our expansive regulatory and licensing stack and the expansion in the US. I think by now, most of you are probably ready for the main event to begin, yet here I am again. But bear with me, because now it's about to get a little bit more fun. I get to talk about what's next. And to set the stage, it's worth emphasizing that what we've built so far really is not a collection of products. It really is a foundation that will allow us to finally make institutional on-chain markets possible. We have assets like stocks, ETFs, treasuries that investors can move freely and use whenever they want. We have infrastructure like the Ondo Bridge that makes these assets portable across ecosystems. We have platforms like global markets, which connects the liquidity and pricing of traditional markets to on-chain environments. And distribution, with integrations into DeFi venues, wallets, and centralized exchanges. All of this backed with the most comprehensive regulatory stack that enables us to tokenize and distribute assets in major geographies in a fully compliant way. But what's next is what is going to matter the most, to really turn these components into a full financial system. Now, what do we mean by that? Well, in traditional markets, sophisticated investors don't just buy and hold assets. They use them. They borrow against them. They hedge them. They trade derivatives on them. And they will do all of this through prime brokers, ultimately with the goal to generate a superior return on their capital. This is prime brokerage. On-chain today, prime brokerage doesn't really exist. Leverage is fragmented, collateral is siloed, funding is expensive, liquidity is insufficient, hedging is extraordinarily difficult, and users can't easily move between venues to get the best rate or the best execution. To really see this come to life, it's instructive to look at the most popular platforms for equity perps right now. While they clearly have product market fit for crypto assets, the current on-chain equity perp platforms have real limitations. This graph shows the impact of a simple $1 million buy or long position in Google. This scale is very trivial in TradFi, as you can see via the Ondo Global Markets number. But existing perps platform really struggle with this size. Now, this doesn't mean that we should just give up on perps. Perps have been all the rage in 2025, and rightfully so. They are a very elegant way to express a synthetic levered position on an asset, whether crypto, equity, or commodity. A user can simply deposit stable coins as collateral on the platform, pick any asset, go up to 100x long or short, and do all of this 24/7, even when the underlying markets are closed. Perps also have no expiry, unlike traditional futures or options, making them a very user-friendly trading instrument. The numbers also speak for themselves. Perps volumes on DEX venues reached almost $10 trillion last year. The vast majority of these volumes were expressed on crypto. Only recently have some platforms started to list equities and commodities. But the issue with these equity perps is that they don't allow for effective hedging, with bad liquidity as a result. To really understand this, allow me to walk you through the trade. If a market maker wants to short an equity perp to collect funding and provide liquidity, they have to put up additional capital to buy the spot asset, typically in a traditional brokerage account. This causes capital fragmentation and opens the market maker to unnecessary risk. The market maker is hedged, but not in the eyes of the perps platform. This fragmentation leads to low liquidity, which is exactly what is observed on all platforms today for equity perps, including the market leader. To solve this, you need to connect these two worlds and enable the spot asset as the collateral asset. You need multi-asset collateral. This way, a market maker can buy spot, use it as collateral, short the perp, collect the funding, and provide liquidity, all while being completely hedged in the eyes of the perps platform. This more or less doubles the capital efficiency. A market maker does not need to put up stablecoin capital to open the perp and more capital to buy spot and hedge. This will lead to tighter spreads and better liquidity on the platform, ultimately benefiting all platform traders. Now, why don't all platforms do this? Why don't all platforms enable multi-asset collateral? Well, historically, the problem with enabling different collateral in stablecoins is that you need very deep liquidity on-chain to enable instant liquidation of the collateral asset. No platform has this, so they only enable stablecoins as collateral. This is obviously where Ondo has a unique edge via its Ondo Global Markets platform that can connect the TradFi liquidity to on-chain markets. You could almost argue that Ondo is very uniquely positioned to build a better perps platform for equities and commodities. And we agree. I am extraordinarily excited to announce Ondo Perps, a unique platform that will provide the best possible execution, liquidity, and capital efficiency to provide synthetic leverage on public equities and commodities. Ondo Perps is the first of its kind and specifically designed to have the best liquidity and capital efficiency for leverage on equities and commodities on-chain. Ondo Perps will have the best execution and capital efficiency of any perps platform in the market right now. It will enable market makers and traders to use spot as collateral to seamlessly hedge their positions and collect funding and be rewarded for improving liquidity. Traders will also be able to buy spot assets to be long, yet use these assets as collateral to go short a different asset. Buy gold, use it to short silver. Ondo Perps will also build on our experience with global markets to have more tailored Oracle design to deal with corporate actions. To start, Ondo Perps will enable up to 20x leverage on these tickers that are shown on the page behind me. For those of you outside the US and interested in joining the waitlist, go to ondoperps.xyz right now. By integrating the Ondo Perps platform into Ondo Global Markets, we can bridge the liquidity gap that exists for liquidations of tokenized equity collateral and seamlessly offer multi-collateral on the Perps venue. This integration is truly a first of its kind and illustrates the power of composability between the Ondo platforms. It is also why Ondo is uniquely able to offer this. This last point is worth emphasizing. The Ondo ecosystem is designed to be modular with each other. Each platform can serve as a building block to the next one, all with the aim to increase liquidity, capital efficiency, and investor choice on-chain. This is a key part of how our ecosystem builds towards on-chain capital markets and on-chain prime brokerage. Each platform and product will build on the next. This brings me to the Ondo chain, where over time the performance of each component and the system as the whole will be optimized. Our prime brokerage offering over time will run the most efficiently on the Ondo chain with the best execution, liquidity, and capital efficiency across any network. Right now, however, our platforms are deployed across other blockchains. Ondo GM is live on Ethereum, Binance Chain, and Solana. OUSG and USDY are live on even more chains. And Ondo Perps at launch will be chain agnostic. Some people have questioned this choice. Why not launch the Ondo chain and deploy everything there? The reality is that Ondo has optimized for the distribution of our assets and platforms, not yet the performance of our platforms as an integrated whole. Quite frankly, there was simply no need to. The emphasis was on creating access to TradFi assets for a global user base. And what we found is that the demand for these on-chain assets was real. But as we increasingly fulfill the mission of access to assets, and we shift towards access to services, starting with perps, we've already seen that we're hitting the limits of what is possible on existing blockchains and DeFi ecosystems. We are hardly alone in this regard. Other projects have experienced similar issues. As a result, some chains have optimized for architecture for privacy, like Canton, for order books and matching engines, like Hyperliquid, for payments and stablecoins, like ARC and Tempo. It's very easy to see how the Ondo chain could be similar. We will need liquidity and capital efficiency to build the most effective prime brokerage system over time. We will need enshrined high-performance oracles to ensure that traders do not get picked off due to on-chain and off-chain latency mismatch. And we will need chain logic to ensure that TradFi market makers can supplement TradFi liquidity on-chain, particularly during those sessions where existing TradFi liquidity is not sufficient to meet the on-chain demand, as we currently already see over the weekend. This last point is worth emphasizing. The current state of TradFi is insufficient for 24/7 on-chain capital markets at scale. This is why we welcome developments by the DTCC, the New York Stock Exchange, NASDAQ, and many others in this room to move towards 24/7 systems. To offer prime brokerage with the liquidity that investors demand, we want TradFi systems and liquidity providers that have 24/7 systems. This is also why the first integration that we did with the Ondo Chain testnet was with JP Morgan and their Connexus platform. We need access to these 24/7 systems to make our services work better. It's clear, too, that each TradFi player will have their own 24/7 system, and these systems will not be the same. You will still need a network, the Ondo chain, that can plug into each system and make markets operate as a whole. Perhaps paradoxically, the Ondo chain will only increase in relevance as traditional markets move towards 24/7, as it will be the network that can aggregate, execute, and settle transactions across all venues and platforms seamlessly. Each of these integrations take time. But with each integration, the possibility of 24/7 prime brokerage and true on-chain capital markets is coming closer and closer. We realize that this takes more time than what many people want. At the same time, we know the world is not waiting for yet another general purpose L1 or L2. It needs something much more bespoke that is use case oriented. And that use case is prime brokerage. Ondo Chain will be the network that brings capital markets and prime brokerage on-chain in a public and permissionless fashion. To close this out, it's worth taking a step back and really articulate the full vision of what Ondo is building with our partners. We now have assets like stocks, ETFs, and treasury funds. We have infrastructure with the Ondo Chain, the Ondo Bridge, and traditional settlement integrations into TradFi. We have platforms like Nexus, Global Markets, and now Ondo Perps, and distribution with global access across chains, centralized exchanges, and wallets. All of this grounded in the most comprehensive regulatory stack with already a global footprint both in the US and beyond. Each layer makes the others more valuable, and together they move us from just tokenized assets to a fully functioning on-chain financial system. This is the vision. This is what we are building. This is Wall Street 2.0, and we're really just getting started. Of course, as we've said before, we're not doing this alone, and this is why you are all here. So today we are joined here by our partners and thought leaders You're going to hear from industry leaders on their expectations for 2026 and the future of on-chain markets. You'll hear from policymakers, exchanges, wallets, and so much more. So finally, at this point, sit back and relax, enjoy the rest of your day. Welcome to Wall Street 2.0.